This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Message of the market? Some say all the talk of mega mergers is a sign the rally could fizzle. Others say not so fast.
New era for missile defense as countries look to spend more on defense. We will bring you unprecedented access to Raytheon's defense operations.
Accelerating change. Will you own a car in 20 years or so? An automotive veteran says no. Those stories and more tonight on Nightly Business Report for Tuesday, November 7th.
Good evening, everyone, and welcome. The blue chip Dow Index eked out a record close. It's 75th since Election Day last year. It appears as if dreams of deal-making are still dancing in investors' heads following yesterday's report that Disney approached 21st Century Fox about buying most of its assets. We also told you that Broadcom made an unsolicited massive $105 billion bid for Qualcomm, the chip maker. And who can forget recent reports that CVS Health may look to do a deal with Aetna? Now, the deal talk was enough to send the Dow to an all-time high, up 8 points at 23,557, and its sixth straight day of gains. NASDAQ, though, went the other way, down 18 2/3 at 67,767. How about that? Sixes and sevens. But what could all of this merger talk mean for the broader market rally? Dominic Chu takes a look for us.
It seems like there's a new mega merger possibility being talked about every day, and there are a host of reasons why companies are looking towards bigger acquisitions given current market conditions.
Companies are seeking greater industry penetration, new geographic markets. They're a bit under pressure by shareholders and activists. Also, it is just the relative ease of financing. Companies have access to credit lines from banks. They have high cash levels on their balance sheets, in aggregate of over $2 trillion among S&P 500 companies. Also, their stock prices as a buyer are at very high levels.
When companies are already that big, growing their business and their profits gets harder and harder. That's why buying someone else's business is often seen as a preferable option for using a company's capital.
What you really have is companies buying growth. And they add it on, and that sets a new base for their business. And then as growth slowly comes back, their earnings can really explode. So there's a lot of opportunity still, but you have to do your homework. Not every deal is a good deal.
So are there really that many companies looking to do these big transactions on this massive scale? Well, according to Peterson, there have only been 10 announced mergers of at least $20 billion in size so far year to date. That compares to 17 last year and 22 in 2015. We're also seeing what's on pace to be an overall decline in dollar volume of merger activity, and that could mean potential upside for the stock market.
The last 5 or 6 occurrences where M&A decline in 1 year, the following year, equity prices improved.
Predicting the markets with a long-term successful track record is a fool's errand, but many experts feel as though even with all the merger activity that we're seeing, it doesn't necessarily mean we're at a market top. For Nightly Business Report, I'm Dominic Chu.
So let's turn now to Mark Lucchini to talk more about what all that deal activity means for the stock market. He is the Chief Investment Strategist at Janney Montgomery Scott. Nice to see you again, Mark. Welcome back.
Thank you, Sue.
Well, which is it? Is it companies buying growth, or is it a market overheating, or maybe somewhere in the middle of those two things?
I suggest it's probably somewhere in between. I'm sure some companies are going to be desperate to try to find growth by way of acquisition. And as was mentioned in the previous segment, the cost of capital is exceedingly low right now. So to fund the acquisition instead of using up cash through the credit markets is an option that's available to them. But I think more so, it's indicative of two things. We've seen an increase in CEO confidence levels. That's helping us to embark on a capital expenditure upcycle that I think has some legs to last, and I think that's going to be a nice boost for economic activity overall. But it's confidence, though, in the sturdiness and the durability of this economic expansion we're experiencing at the moment. And I think, secondly, it's also a function of the fact that we're in a regulatory environment where we may not see necessarily massive rollback of regulation, just not new regulation imposing on businesses. And as a consequence of that, I think the business community is finding this opportunity ripe to make bold acquisitions.
Election Day was 1 year ago tonight, Mark. How far we have come. Are you surprised that the market has taken off the way it has?
Well, clearly, I mean, we've seen one of the best advances under the first-year term of a president in history. And so not necessarily because it's all attributed to Donald Trump and his administration. I think a lot of it has to do with the improving economic fundamentals, not only here domestically, but on a global front. But that said, I mean, the advance has come a long way in a course of 12 months, and valuations are now pretty demanding. So it's going to take not only continued economic improvement, but also, I think, an administration that's going to be careful about policy as it relates to their activities in helping to understand what it's going to take to not only continue to foster an environment that's good for the business community, but maybe even accelerate growth by way of something like the corporate tax reform package we're expecting to see here over the coming months or even weeks.
You said that valuations are somewhat demanding. Does that mean that you would not be surprised to see a bit of a correction?
Sue, I mean, if you look at most indicators, the market's overbought at this juncture. So we may see a correction in time as opposed to in price. But either way, should we see the market go more sideways than up, or perhaps pull back a little bit because we don't have a fresh catalyst to move stocks in a measured level higher from here, that would not shock me, nor would it derail me from my otherwise bullish position in my belief that we're going to see equities continue to advance not only the remainder of this year, but well into 2018 as well.
On that note, Mark, thanks so much, as always.
You're welcome, Sue.
Mark Lucchini with Janney Montgomery Scott.
To the economy now, there are more than 6 million job openings in the country right now. According to the Labor Department, that is close to a record number and shows that underlying demand for workers remains healthy. The report also showed that Americans are quitting jobs at a healthy pace, something that could help lift wages.
In his first public comments as a Federal Reserve official, Governor Randall Quarles said the central bank should take a fresh look at regulations, including stress tests, capital holdings, and living wills. Quarles is serving as vice chair of bank supervision, a position created as part of the post-financial crisis reforms under Dodd-Frank. In his remarks today, he said he would like to see the Fed become more transparent, especially when it comes to the annual bank stress tests.
President Trump spent the day in South Korea, the first state visit of a U.S. president to that country in 25 years. And as Kayla Tausche reports, the president was measured in his remarks.
It was a day of pomp and circumstance with serious issues at the forefront as President Moon received President Trump at the Blue House. The leaders calling on other nations to join them in pressuring North Korea to halt its nuclear aggression, even as President Trump suggests diplomatic efforts are working.
I think we're making a lot of progress. I think we're showing great strength. I think they understand we have unparalleled strength.
President Trump's first stop in Seoul, Camp Humphreys, a military base jointly funded by the two nations, home to 26,000 soldiers and their families. In the city center, heavy police presence to keep demonstrators at bay, supporters waving American flags, and signs praising Trump's tough talk. Opponents criticizing him for provoking a war with North Korea and ramping up military capabilities.
We have the greatest military equipment in the world, and South Korea will be ordering billions of dollars of that equipment, which frankly for them makes a lot of sense. And for us, it means jobs. It means reducing our trade deficit with South Korea.
Trump says the new sales agreed by the countries will boost U.S. jobs and reduce its trade deficit. That deficit, the reason Trump's revisiting a 5-year-old free trade deal with Korea. Jeffrey Jones is with the American Chamber of Commerce in Seoul. He says one industry in particular needs adjustment.
Our biggest problem, quite frankly, with the deficit is the automobile. The Koreans are sending more automobiles to the United States than we are sending to Korea. This market here is very small. The market in the U.S. is very big.
After addressing Korea's National Assembly, Trump's next stop is Beijing, where he'll again home in on trade deficits. The U.S. is with China is its largest, and ask China to keep exerting pressure on North Korea. For Nightly Business Report, I'm Kayla Tausche, Seoul, South Korea.
And as Kayla just mentioned, the president does make his way tomorrow to Beijing for a high-stakes meeting where he will be discussing things like trade, market access, and investment with the head of the world's second-largest economy. Eunice Yoon is in Beijing.
The Chinese government is promoting President Trump's trip as a state visit plus. The foreign ministry said today that the president would enjoy the same lavish dinners, welcoming ceremony, and bilateral meetings as for any state visit, but that the authorities here would add a few personal touches, cozy and casual events so that the two state leaders could continue to get to know each other personally. The ministry said this is reciprocity for President Xi's intimate trip to Mar-a-Lago. On the agenda, North Korea and trade. Both Chinese and U.S. officials say that the focus is going to be to address the trade deficit. The expectation is that the two will announce concrete deliverables. And based on the delegation traveling with the American president, the deals will center on energy, agricultural products, planes, and other equipment. Goldman Sachs' CEO is also with the president, and he's expected to announce a partnership with the Chinese sovereign wealth fund, CIC, to co-invest $5 billion in American manufacturing. Many in the American business community here are worried that the emphasis on the trade deficit could potentially distract from some of the larger issues that they feel are important, like market access, tech transfers, and competition in the industries of the future. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Still ahead, a business that's skyrocketing.
I'm Morgan Brennan in Huntsville, Alabama. Behind me, defense missiles built by Raytheon and ready to be deployed to help counter the growing threat of North Korea. We're bringing you unprecedented access into America's missile defense systems. Coming up on Nightly Business Report.
On his trip to Asia, President Trump is urging our nation's allies to spend billions on American military gear, including missile defense systems. Morgan Brennan traveled to multiple cities for unprecedented access to Raytheon's operations. She went to Huntsville, Alabama, Tucson, Arizona, and more.
Tucked behind security gates in the Arizona desert, Raytheon is building 3 new facilities to better handle a business that's skyrocketing. Raytheon makes missiles, radars, and sensors, key technology that contributes to America's missile defenses.
Basically, this is a little spacecraft that once it's released, it has to maneuver going, over 10,000 miles an hour to get to the target and hit in a very specific place to take out a nuclear warhead that's coming in.
That little spacecraft sits inside a rocket buried underground in Alaska or California. It's a crucial piece of the Homeland Missile Defense System made by Boeing, a system in place to counter an intercontinental ballistic missile attack. The mounting threat of such an attack by North Korea is fueling demand for missile defense, benefiting companies like Lockheed Martin, Boeing, and Raytheon, which has a hand in all of America's missile defense systems.
We're definitely seeing a very strong demand signal for increases in missile defense just because of the threat situation in the world today.
There are 4 different types of missile defense: Boeing's Homeland System, Raytheon's Patriot, Lockheed Martin's Terminal High Altitude Area Defense, or THAAD, and Lockheed's Aegis system. Here in Huntsville, Alabama, Raytheon is storing its defense missiles in here before they're sent off to U.S. and Japanese warships in the Pacific to help defend against a potential North Korea attack. These structures are filling up, and more orders are likely to come. Experts say demand is broad-based across all systems, ushering in a missile renaissance.
Both strike missile capability and missile defenses are ramping up in terms of the interest for them, both with the United States, with our partners and allies, and also among our adversaries. There's a lot of air defenses, there's a lot of missile defenses out there, and you see a lot of really big buys, measured not in the millions, but in the billions of dollars.
U.S. lawmakers are looking to boost the missile defense budget, and President Trump requested even more funding this week. Allies are buying these big-ticket systems as well, including Saudi Arabia, Poland, Japan, and now Sweden. As government spending increases and the technology continues to evolve, it's driving growth for those in the business of keeping America and its allies safe. For Nightly Business Report, I'm Morgan Brennan in Huntsville, Alabama.
Valeant posts a profit, and that's where we begin tonight's market focus. The drug maker said strength in its Bausch & Lomb eye care business led to stronger results that topped expectations. The company also maintained its full-year guidance for earnings and said it paid off about $6 billion in debt. The shares popped 17% to $14.10. Mallinckrodt is warning that its sales of its top-selling drug are declining. The pharmaceutical company reported weaker sales of its costly multiple sclerosis treatment and said pressures from payers resulted in unfilled prescriptions. In the latest quarter, the company's overall revenue disappointed, while earnings were a beat, but shares got crushed nonetheless. They fell 35.5% to 2011. Despite facing hurricane disruptions, Royal Caribbean grew profits at a more robust pace than the street was expecting. Sales were also higher than expected. The cruise operator said it is seeing strong demand for 2018 bookings. Royal Caribbean shares made waves. Get it? They rose 3% to $129.23.
Tapestry, the company formerly known as Coach, reported revenue and same-store sales that fell short of analyst estimates. The luxury goods maker blamed the miss on inventory issues and the hurricanes, but did note that it has returned to growth so far this quarter. Earnings topped expectations, and the company said it is on track to meet its full-year outlook. Shares of Tapestry up 1% at $41.93. After the bell, the online real estate company Zillow reported results that were ahead of street estimates. The company also said it saw a rise in the number of users. Shares initially higher in the extended session, but they did finish the regular day down 2% to $39.97. Snap also reported after the bell, but its results struck a different tone entirely with investors. The parent company of Snapchat saw sales for the quarter fall well below estimates and said daily active users, a key measure, grew at slower than expected rates. Snap narrowly beat earnings expectations. Shares were pressured in after hours. They did end the regular session, as you see there, up almost 2% at $15.12.
The activist investor Bill Ackman lost his high-profile proxy battle with ADP, the $50 billion payroll processing firm. Ackman failed to gain any board seats after shareholders voted to re-elect all of its directors. But despite today's loss, Ackman says he wants to see the company be successful.
We're rooting for them. We hope they're successful. If they are successful, the stock price is going up a lot. If they disappoint, we will get in there and we'll be able to make the necessary changes to make this a much more profitable business. That is the business of shareholder activism. So we have won and we have lost proxy contests. In our history, we've run very few, but it's one of the tools that we use in order to influence a company.
Ackman had called ADP's management inefficient and blamed them for the company's poor performance. But after today's results, the CEO of ADP says it's time to move on.
I think it's the largest margin of victory of any large cap proxy contest ever. And so I think that would hopefully be a message to Bill that it's time to move on. I think that the pension plans and other investors that put money into his fund and charge him and pay the exorbitant fees that he charges and give up 30% of the upside would be well served to really deliver a message to him that he should move on and focus on something else.
Shares of ADP rose today and are up about 9% so far this year.
Apple has denied accusations that it moved its operation from Ireland to an offshore tax haven to avoid taxes. The denial follows the release of the so-called Paradise Papers, which we told you about yesterday. Those leaked documents reportedly show that the company shifted key parts of its business to the Isle of Jersey as an offshore tax haven. According to a statement, Apple is the largest taxpayer in the world, paying more than $35 billion in corporate income taxes over the past 3 years.
Coming up, own a car? Why some say that may very quickly become a thing of the past.
Toyota apparently hitting some roadblocks in its biggest market. Japan's largest automaker said sales in North America dropped to a nearly 3-year low. The company now struggling to sell cars and as a result is increasing incentives. It's also dealing with a shortage of its popular RAV4 crossovers. But there was good news. Toyota upgraded its full-year operating profit forecast on expectations of a weaker yen.
So, are you ready to hail a ride in a self-driving minivan? Well, there's a new service starting up that will give people rides in vans where there is no one in the front seat. Phil LeBeau explains.
Get ready for driverless cars to take you around town, or at least around the Phoenix area. Waymo, formerly known as Google's self-driving car project, will soon start offering rides to the public in self-driving vans, where there is nobody in the front seat.
A lot of these studies, if you put them all together into one meta-analysis, the basic number is about 50% of folks, it seems, are ready to experience a true driverless ride. We think that's a great show of confidence in the technology, and we think getting people in our cars is going to help increase that level of confidence.
Waymo's ride-sharing service will directly compete with Uber and Lyft, who pioneered the market. In fact, they dominate it, with Uber giving an estimated 70% of the rides in the U.S., while Lyft drivers provide 25%, and others have the remainder of the market, including BMW's Reach Now service. Meanwhile, GM's Cruise Automation is developing self-driving vehicles as automakers and tech companies rethink how we get around. Even a former executive for General Motors believes it may not be long until most of us give up buying or driving a car.
It is absolutely inevitable. I mean, human-driven vehicles are on their way out, except at automotive country clubs and off-road dude ranches.
After testing its self-driving vehicles over 3 million miles on public roads and millions more in simulation, Waymo says its minivans are not only safe, but also ready for paying customers.
You'll see us over the course of the next several months and quarters beginning service, that same sort of service in other parts of the U.S.
At least initially, Waymo's self-driving minivans will have a Waymo representative sitting in the third row to answer any questions or in case there's a problem. But over time, it will eventually be either the passenger or passengers sitting all alone with no one behind the steering wheel. Phil LeBeau, Nightly Business Report, Chicago.
And Phil says he'd happily ride in one of those driverless cars. In his report, you heard the former GM executive Bob Lutz say that human-driven vehicles are on their way out. He said it could happen in 20 years or so, essentially ending the automotive industry as we know it. Rebecca Lindland is an executive analyst with Cox Automotive, and she joins us now to discuss. Is Bob Lutz right, Rebecca?
He's right in that I think eventually we will get there. His timeline is very, very aggressive, though, for seeing no cars on the road, because basically he's talking about in the next 10 to 15 years, and then that gives five years for people to get rid of their cars, to scrap their cars, and that leaves 20 years. I think it's right in that we are definitely heading in that direction, but actually getting there, I think it's a very aggressive timeline.
So where are you on the timeline in terms of what the progression will be?
Well, you know, Sue, we're already starting to see more vehicles with autonomous features or self-driving features, automated driver assist systems. Those are things like lane keep assist. And you'll actually be driving down the road and the car will actually move you back into your lane if you start drifting. So we're already, that's called level 2 in autonomous vehicle lingo. And so we're already starting to see more and more vehicles moving into that direction. But getting to level 5, which is what Bob is talking about, where no steering wheel, no brakes, you're basically in just a pod, I equate that to getting to, you know, the top base camp at Everest and not actually getting to the very top of Everest. It's really going to be difficult moving past and getting full autonomous pod-like structures.
I got a lot of questions, but let me just start with a couple of them. My sense is that people actually like to drive.
Absolutely, Tyler. I started out my morning in a $2 million Bugatti Chiron. So,
name dropper.
Oh, whoa. I know, right? That's a not so humble brag. And that was a spectacular experience, I'm not going to lie. So it's absolutely a joy to drive. I lived for 2 years in Saudi Arabia and I wasn't allowed to drive. And so there is this element of enjoyment, of freedom that you get from driving. Now, people will say, well, that's because you're old and young people don't want to drive. But we're actually we're continuing to see an evolution in terms of younger people.
So my second question is, I have some of those autonomous features on my car, lane assist, but I know better than those things. I know that I can get over. And they're beeping at me, and it gets me frustrated, Rebecca.
No, absolutely. I mean, I was on a test track, and they actually had to turn them off because the steepness of the hill as we were driving up, the car would stop just as we were coming out of the straightaway because the hill was so steep.
Yeah.
So there's a ton of stuff still to work out.
All right, Rebecca, thank you very much, and I'll keep you posted.
Thank
Rebecca
you.
Lindland with Cox Automotive.
And finally tonight, United Airlines is bidding farewell to the Boeing 747. The double-decker plane is widely credited for making air travel more affordable for millions of people. United's final 747 flight took off from San Francisco en route to Honolulu, the same route as its first flight in 1970, complete with a cabin crew that will be dressed in uniforms from that decade. Delta is the only U.S. carrier still flying the 747. Its final flight is scheduled for next month.
Wow, the passing of an era.
It definitely is. That does it for us tonight. I'm Sue Herrera. Thanks so much for joining us.
I'm Tyler Mathisen. Have a great evening. See you tomorrow.
See you.